Hey everybody, it's Dave from Wycott Realtors Lake Point. You may have heard in the news, read in the newspaper. Do you still read the newspaper? I do. I actually read it every morning. Old. But the Federal Reserve yesterday came out with some information that they're thinking of ramping up the interest rates, the prime interest rates, a lot faster than anyone thought they would, up to maybe 3 times next year. And so I thought it would be a good time to just talk just briefly about how that can affect the real estate market. I'll be honest with you. I don't totally always understand the interest rates and how these work, but I do know that usually when the prime interest rate goes up, the mortgage interest rate will likely go up. Most of the predictions we've seen from Freddie Mac, Fannie Mae, Realtors, or National Association of Realtors have it kind of looking at somewhere around 3.5 to 3.7% by the third quarter this year. And so that may not sound like a big deal. Right now it's around 3, a little over 3. What difference could a 0.25% or a 0.5% make on what you can buy? But in fact, it can make a really big difference. Just for example, we were just doing a presentation the other day in the office and have a little an image graph that shows the difference between like a 3% and 4% interest rate. And I'll try and post this in the comments, or maybe I'll even try and get in this video. We'll see. But at 3%, on a $340,000 house, the monthly payment is about $1,433. At 4%, that payment goes up to $1,623. That's $190 more per month because of 1% interest rate increase. And so you can do the math on that relative to, well, if it went up 0.5%, right, you're talking nearly nearly $100. So that's not nothing, right? I mean, my monthly water bill at our house on the east side of Madison, which is a couple thousand square feet, is just under $100. And we're pretty conscientious about how we use water. So just to put that into some context, when you're thinking about your housing costs and things, waiting right now to get in the market is going to cost you money. It's going to cost you a huge amount of money? Probably not. But over the course of a year, and especially given that $340,000 is where a lot of houses are in Madison right now, waiting now, waiting until summer or the end of the year to see if things will cool off a little bit, if you're a buyer, could cost you a couple $100 a month. The other thing from a seller standpoint is take this into account too. You may want to try and get your house in the market if you're planning to sell sooner rather than later, so that while buyers are still taking advantage of these extremely low interest rates, you can get as much action on your house as possible. That doesn't mean that if you try and sell your house in the fall, it's not going to be competitive. Madison has been a seller's market for years, right? It is going to be competitive. Your house is going to be marketable. But it may be slightly less marketable than it was, say, in February or March this year. So those are just some things to keep in mind for buyers and sellers as you're thinking about getting in the real estate market, or listing your house, buying your first home, buying your second home. These interest rate changes are not just something that happen in the background. They have a real effect on people's spending ability and their monthly costs. So keep that in mind. Contact us at Wycott Realtors Lake Point if you need help with anything real estate related. We will be happy to do that. Or if you just have questions about how the process works, we are happy to talk to you about that too and connect you with people that can help you. So that's it for today. Have a happy holiday if we don't talk before then, and talk to you soon. Bye.